Welcome to This Explainer. Today, we're breaking down the latest data driving the global silver market. It is a wild time out there. Exploding industrial demand is colliding with shifting monetary policy and, honestly, the precious metals landscape is transforming right before our eyes. If you are investing or just tracking the market, understanding these undercurrents is absolutely essential right now.
So let's kick things off with a massive question that's basically living rent-free in the minds of institutional investors everywhere right now. What if the next move in silver catches the entire market completely by surprise? It's a scenario we've got to take seriously, because the macro data and those underlying supply-demand fundamentals, they're telling a super compelling and potentially volatile story.
Look at the headlines. Silver is currently trading near a massive $58.37 per troy ounce. That specific number is huge. It brings us to a critical crossroads. We're all watching to see if silver can actually sustain this upward momentum, or if a short-term pullback is knocking at the door. We're literally sitting right on the edge of a major technical resistance level, one the market hasn't comfortably held about in a while. So testing this line is a really big deal for long-term forecasting.
To make sense of all this, here's our agenda. We're going to cover 1. The global silver snapshot. 2. Pakistan's local silver market. 3. The macro market drivers. 4. Silver's industrial advantage. And finally, 5. What to watch next. Let's get into it.
Section 1. The Global Silver Snapshot. Let's look at international spot prices.
All right, breaking down that global spot price, $58.37 an ounce translates to roughly $1.88 a gram. Scale that up, and you're looking at just shy of $1,900, $1,876.64 to be exact, for a kilogram. This highly liquid international market is our anchor today. It sets the baseline valuation for the whole world before any local premiums even enter the picture.
Moving on to Section 2. Pakistan's local silver market. Let's talk regional rates.
When we translate that global anchor into local terms, 1 tola is currently trading at 6,301 rupees. 10 grams sits at 5,401 rupees, which basically breaks down to about 540.1 rupees for a single gram. But remember, the precious metals market never really sleeps. These figures fluctuate all day long, as global markets react in real time to breaking economic news and algorithmic trading flows.
So, while the international spot market sets the big picture trend, local Pakistani prices diverge because of 3 main things: exchange rates, import costs, and local taxes. Think of these as filters. Whenever you compare regional pricing to the global benchmark, the price has to pass through these 3 specific filters. A sudden jump in currency valuation, for instance, that can cause local silver prices to spike even if the global dollar price hasn't budged an inch.
All right, Section 3, the macro market drivers. Let's look at the economic forces at play here.
The absolute biggest factor driving the market today is the US dollar. It's basically a giant seesaw. Because silver is overwhelmingly traded globally in US dollars, a super strong dollar pushes silver prices down. It puts immense pressure on the metal because it suddenly becomes way more expensive for international buyers holding other currencies. On the flip side, a weak dollar shoots silver demand right back up, making it highly attractive and functionally cheaper to buy across global exchanges.
And we see a very similar seesaw effect with Federal Reserve monetary policy, especially with real yields, meaning inflation-adjusted interest rates. Higher real interest rates pull big institutional money away from non-yielding assets, like silver, straight into interest-bearing government bonds. That absolutely kills short-term demand. But the second the markets expect those rates to stabilize or drop, boom, capital rushes right back into precious metals to ride that upside momentum.
And we definitely cannot forget inflation. When inflation stays hot and fiat currency steadily loses its purchasing power, capital consistently flows into silver. It's the ultimate historical, physical hedge. Investors use it to protect their underlying wealth. That long-standing reputation as a safe haven is exactly what keeps baseline demand so robust whenever economic growth gets shaky or central banks get aggressive.
Let's pivot to Section 4, Silver's Industrial Advantage. This is where we talk about its dual nature.
Now, unlike gold, silver has this fascinating split personality. Sure, it's highly prized as a monetary safe haven and a store of value, but it is also a completely indispensable component of modern industry. It's the most electrically conductive metal on the periodic table. You literally cannot build the technology of tomorrow without it. This dual nature creates a unique price floor for silver that gold just doesn't rely on in the same way.
I mean, just look at this list. Silver is heavily used in solar panels, electric vehicles, smartphones, and life-saving medical equipment. Modern solar panel production alone now eats up over 10% of global silver demand, and that percentage is climbing. Factor in the massive infrastructure being built right now for AI hardware and advanced semiconductor manufacturing, and governments and tech giants are scrambling to lock in supply. The industrial side of this demand equation is going to be incredibly strong for years to come, regardless of what the broader economy does.
Finally, Section 5, What to Watch Next. Here's how to track the market.
To stay smart with your investments and figure out where this $58 price point is heading, you've got to monitor a few key metrics. Keep a really close eye on upcoming U.S. inflation reports, Fed policy announcements, U.S. dollar strength, geopolitical developments, and raw clean energy demand. Every single one of these macro factors has the immense power to inject serious volatility and dramatically sway silver's trajectory from week to week.
Ultimately, interpreting all those global events comes down to two colliding realities. In the bullish scenario, if we get elevated, sticky inflation paired with a weakening U.S. dollar, silver is going to effortlessly keep attracting eager buyers, pushing prices aggressively higher as both a hedge and an industrial must-have. But in the bearish scenario, if the dollar flexes its strength or real interest rates stay higher than expected, silver will absolutely face some immediate short-term volatility and heavy downward pressure as money rotates back into bonds.
So, I'll leave you with this to chew on, based entirely on the hard data we've unpacked in this explainer today. Will this relentless industrial demand and the deep-seated need for inflation hedging push silver past that crucial $60 threshold in the coming weeks? Or, thanks to the immense pressure of a strong U.S. dollar and elevated interest rates, is a short-term correction inevitable first? It is a multi-billion-dollar question for the market right now, but one you are now fully equipped to monitor and navigate. Thanks for hanging out, stay informed, and keep learning.